Money Talks, I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines.
I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world. Reciprocal.
President Trump unleashes his plans and reciprocal tariffs, dealing a blow to global trade. U.S. stock futures plunge. What will the new tariffs mean for services export-dependent Philippines? Weighing in on this, we have Raul Ruiz of the Ateneo Graduate School of Business, Bob Herrera Lim, Managing Director of Global CEO Advisory Firm Ateneo, and Dino Aquino, Vice President and Fixed Income Trading Head at Security Bank Asset Management Group. Asian markets have tumbled with the new tariff announcements. The peso opens weaker. And we speak to Carlos Barrera, the CEO of Lazada Philippines and Indonesia, one of the leaders in retail and e-commerce in Southeast Asia. U.S. President Donald Trump unveils sweeping new tariff plans affecting virtually all of the country's trading partners on what he calls Liberation Day. After weeks of guessing which route the president will take, Trump chose a combination of across-the-board and individualized tariffs. Trump says in an announcement at the Rose Garden that the U.S. will impose a 10% baseline tariff covering all imports. But certain countries will be hit by reciprocal tariffs as high as nearly 50%. These levies will not apply to products that Trump has already hit with separate duties. Energy and other minerals not available to the U.S. are also excluded. Philippine exports to the U.S. will be facing a 17% quote discounted tariff. A White House list indicates that Manila has charged the U.S. with a 34% levy, including, quote, currency manipulation and trade barriers. Asian countries, particularly those in the ASEAN region, are severely hit by the duties. The U.S. imposed over 40% tariff on ASEAN countries like Cambodia and Vietnam. China will be hit the hardest since its 34% reciprocal tariff is on top of the 20% duty that Trump imposed due to the fentanyl crisis. The European Union also gets a 20% reciprocal levy, while the UK is relieved after receiving only 10% duties instead of the expected 20%. Canada and Mexico are excluded from the list.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. It's not going to happen.
Part of the reason why the Trump administration has pushed through with the reciprocal tariffs, the high trade deficits with some trading partners. For instance, in Vietnam, with a $120 billion deficit, it got a 46% tariff. Countries with trade surpluses, however, are largely spared. Brazil, with a $7 billion surplus, got away with only the baseline tariff of 10%. In a Reuters Ipsos poll, conducted from March 31st to April 2nd, Americans largely disapproved of Trump's job performance. His approval rating stood at 43%, down from 47% just last week. Americans are worried that the tariffs, quote, would do more harm than good. As we're all over global trade, one Philippine-listed stock that we've been keeping an eye on is ICTSI. To the technicians, such as Ron Acoba of Trading Edge, ICT may be considered a proxy for global trade. As you can see here, ICT is the world's largest independent terminal operator in 6 continents. After pulling back from 438 pesos a share, that may be gearing up for a possible upswing soon. But a key level that it needs to clear is its pivot point at around 395, right about here. And according to Acoba, a move past that is going to lift it back to its all-time peak. If we see a move past 395 pesos, it could mean that the uncertainties regarding Trump's tariff may already be over. On the other end, a slip below its 325 reaction low will trigger a fresh wave of selling, suggesting that global trade may start to worsen. Now, this chart may just be another way to make sense of it all. With us now for more in studio is Raul Ruiz, the former president of RCBC Securities and professor for finance and investments at the Ateneo Graduate School of Business. And we're also joined by Dino Aquino, the vice president and fixed income trading head at Security Bank Assessment Management Group, joining us on the line. Thank you so much for being here, Raul, in studio, and Dino online. I know it's very busy at the trading floor. What do you make of the announcement? I mean, it was hard enough to keep awake, to try and wait for the announcement and then waking up, getting those figures, jolting us from our sleep.
First of all, good morning, Cathy.
Good morning.
And thank you for having me here. Well, that was a surprise. No, not just for me. I think for most people that was a surprise.
How
but
come?
If
I mean, we've had it for the last 3
yeah.
months. I mean, here and there, you know, pushback, pull forward. What was the surprise there?
I was thinking that Trump would focus on China. And in fact, it did increase the tariffs on China so much more than it did for most other countries, up to 54% if I'm not mistaken. But even though the fact that the 10% tariff baseline on practically all imports by the US hit me as a surprise. And in addition to that, of course, the reciprocal tariffs, including the reciprocal tariffs applied to Philippine exports, also came as a surprise to me. 17% tariff on Philippine exports is substantial and could negatively impact on Philippine exports to the extent, of course, that Americans can find cheaper domestic substitutes for Philippine exports.
But we're not really an exporter of goods. It's really more services.
That's correct.
Raul. So
Yes.
really, the silver lining there is the services exports, which will
Yes.
carry on fine, unless I'm mistaken at this point. What are you seeing down the line?
Yeah, and in fact, that is the general idea, that the Philippines is largely a service exporter and is not so much a participant in the global trade of goods. No, but nevertheless, that will affect the few billions of dollars that we export to the United States by way of goods. No? Having said that, as you said, the good thing is most of Philippine exports are services anyway, and therefore, hopefully, that's not going to be hit by the tariffs.
But a lot of our economy is really driven by remittances. And then
sure.
we put into perspective the fact that 40% of our remittances come from the U.S.
Right.
And there is the Trump migration policy that's going to get rid of all the illegals.
Correct.
And my last count was, unconfirmed, about half a million illegal Filipino workers in the U.S. that might be impacted, that might also impact our remittances
Sure. No.
and our GDP.
Right. No. So, all told, the President Trump's policies since he became president, from tariffs all the way to his anti-migration policy, will have a negative effect on the Philippines, particularly on gross domestic product, as well as inflows of remittances. And it's bad enough that we hit below the target last year. We only hit 5.6% GDP growth, as you know. And this year, we're looking at 6%. But given these policies that have been instituted by President Trump, then hitting that 6% may not even be an easy challenge.
Let me pull in Dino right now as the phones are ringing off the hook. Dino, how is it going over there? I know you can't appear on camera because you're moving around in the trading floor. What's been the reaction so far? I'm seeing the peso down, but what about the PSCI?
More of a defensive still. Spreads have widened versus the U.S. Treasury yields. If you look at the bond yields in the U.S., it rallied quite a lot. We practically didn't move from yesterday's levels, maybe 1 to 2 bips lower. because of the added risk premium due to the rally, due to the uncertainties with regard to the tariff. But I think the market right now is pretty much defensive. If you look at everyone, I think everyone's still digesting how all this pans out, and if he's going to add something to the, I think it's just an appetizer for me, if you ask me. The announcement earlier today.
Right, appetizer, as you say, but we're watching how the markets trade, and throughout the day, this is going to be the first full trading day of the impact. What sort of calls are you getting? Questions from clients, maybe? I'm so glad that I got this phone call through. I'm sure it must be busy down there.
Most of the question is where do we put our money, given all this.
And what have you been
given all
saying?
this news. Yeah, well, for me, if you look at the movement, everyone's moving to haven assets right now, which is first, of course, as you know, I saw in your update on LinkedIn, gold has been the best performer for the quarter, so everyone's moving to gold. I think that's one safe haven asset. Bonds, considerably, is still a safe haven asset for me if you look at it in perspective, especially if our inflation comes out lower than expected this Friday. I think we could probably see bond yields move lower, and it could be a catalyst for bond yields locally to move lower and
Right, so
basically make more money for this year.
how much lower then? Because it's not only Trump, we've got the inflation data out tomorrow on Friday, and then the decision by the
tomorrow.
Banco Central on the 10th.
April 10th, yeah. They mentioned baby steps. I think Jello, our economist, mentioned baby steps in your previous discussion. But 25 is pretty practically priced in already in the market. But I don't think 50 is out of the table. It basically all depends on what happens on inflation tomorrow, especially if ghost concerns continue to dampen the mood locally. As mentioned by Raul, 5.6% is also the growth that we hit last year. So we can't afford to really slow down this year, especially on an election year.
We can. And you're predicting what, 1.8% for inflation for March, is that correct?
Yeah, 1.8%.
So you're one of the
for me.
slowest,
But
in
our
fact.
house call is to, just for clarity. Yeah, it's just a personal call, yeah.
All right. I'm seeing the PSEI now down about 0.4%. What are you seeing in terms of volumes? Are we getting the volumes, Dino, at this stage? And are you able to identify whether they're foreign or local?
Right now, it's net foreign selling. I'm seeing net foreign selling right now in the stock market. So value turnover is now 216. So it's quite low still. So even in the local bond market, it's still quite low. The trading volume is still very thin. So everyone, I think, is really just trying to digest everything that Trump has mentioned and how the markets will react, how Europe will react, and how EU will retaliate. I think the monkey wrench right now is if the European Union will actually retaliate harsh. So if they do, then that would create more problems on the global trade.
That's true. And trading begins in Europe in a couple of hours. Raul, do you think that Europe might actually react more strongly and really the story will be in Europe's hands when the sun rises there?
Yeah, it will probably react more than the Philippine market, primarily because of the greater trade relationship between Europe and the United States. But having said that, as we saw the U.S. futures market going down, but then eventually recovering to almost flat, then that might also be the story for the European markets later.
Okay, we're just going to take a break here, but I'd love to have you here to continue our conversation, Raul. And Dino, I hope you can stay with us with all those calls, rain off the hook.
Sure, no problem.
Thank you so much.
Yeah.
We'll be back after the break. Okay, yung forecast is still 5.6%, is that right?
For this year?
Yes.
No, 5.9.
Yes. So, Carlos, welcome back again. Thank you so much for hanging out. That's a bit of a briefer and really a breather. Markets are stuck. I think analysis paralysis, they're still trying to figure out what's happening. But from Carlos' point of view, I just wanted to get to know what tariffs on top of geopolitical risks. All right. Thank you. Welcome back to Money Talks. I'm Cathy Yang. We're still joined live by Raul Ruiz, the former president of RCBC Securities and professor for finance and investments at the Ateneo Graduate School of Business. And on the line, Dino Aquino, taking care of all those calls from clients, the vice president and fixed income trading head at Security Bank Asset Management Group. And to add on to our discussion, I've got Bob Herrera Lim joining us on Zoom, the managing director of global CEO advisory firm Teneo, and Carlos Barrera, recently appointed CEO of Lazada Indonesia and still heads up the Philippine portfolio, also on Zoom. Let's take it up first with Carlos. I need to congratulate you on your 13th year because that's what we were here for, and also your appointment as the Indonesian head along with Philippines. You're involved in most of the markets. Your clients, your customers, suppliers are in the markets that have been hit by the highest targets in the ASEAN. What's your initial reaction?
Thank you, Cathy. Well, we've been investing over the last 13 years to develop these markets. And I think what's great is that these are very, very large markets with really strong internal consumer demand, right? So we have been developing the infrastructure to make it easier for the B2C business, for the manufacturers and the sellers to serve these consumers. And I think as cross-border business becomes more challenging, the reality is that the large majority of e-commerce in these countries is local commerce, especially local businesses selling to local customers. So what we may see is that some of these manufacturers focus a bit more instead of exporting into creating their own brands and trying to tap the local demand. But it's quite early to tell, right? The reality is that these countries still have very strong local demand, and that as it becomes tougher probably to export or to run cross-border businesses, it's a great chance for them also to go online and to, in a way, develop their own brands and their own channels, right?
So localization is really the key, but give us maybe a comparison of what consumer behaviors have been like over the past 3 months with all the Trump uncertainties. And right now we've got percentages across different countries that you're doing business in. I mean, are they as ravenous in terms of consumer appetite when you compare Indonesia and the Philippines, since you're taking care of both markets?
What we see is that there's very strong momentum around fast-moving consumer goods. People are buying more essential items, a lot of groceries, mother and baby, even beauty. And then generally we're seeing higher baskets. People are buying more quantity and slightly less frequently, right? So we're seeing, for example, a very strong momentum around payday campaigns. When people get their salary, they tend to buy more and buy larger quantities. And we're seeing that on average, people are a little bit more price conscious and they're comparing more. That's why we tend to see higher uplift and higher sales during campaign events, right? We recently had our birthday, now we're having 4/4. People are generally trying to get better value deals, even if that means buying larger quantities, right? But we're still seeing good growth around branded items, both international and local brands. We do see local brands growing quite fast and investing more, so that could be also a sign of what we were discussing, that they're focusing more on tapping the local demand. But it's still quite healthy, and overall, e-commerce continues to grow and very focused on profitability, both for all the sellers, the brands, and overall more sustainable long-term growth, right?
Well, let me bring in Bob here and talk about this shifting paradigm, if you will. We've come to know of business in a globalized setup. But right now it appears, Bob, that things are becoming more regional or maybe even local. What are you seeing from your end?
Yeah, Cathy, you are right. You know, we grew up during the days of WTO, GATT, and global economic integration. Those days are behind us now, definitely for the next few years. So it's going to be a challenging scenario The world was complicated when we all went to bed last night. It became much more complicated when we all woke up today, and it's going to get much more complicated. Just on some of the stuff you've been discussing, right? So the Philippines, we were hit on the lower end of the tariff scale compared to the other Southeast Asian countries. And for some people, this might seem to be a positive because then we could say to other countries, hey, we're not being hit as hard as Vietnam or as Thailand or Malaysia, and you could relocate to the Philippines. But on the other hand, historically, we have not been good at attracting manufacturing investment for a number of reasons. Too many probably to discuss right now, for everything from energy prices to inadequate infrastructure.
Right, but they got a choice right now, Bob. This is a situation where the tariffs imposed, like for instance in Vietnam, the fastest growing in the ASEAN, is already the biggest, bigger even than the Philippines, and we're a far second in the ASEAN. How can we actually rise above that vicious cycle of never being the first in the ASEAN? Where's the silver lining then?
We have to fix our investment climate. It's that simple, and that seems to be a short answer, but it has a lot of components ranging from in coordinating our responses to investors, doing better to attract them, improving the outlook for all our infrastructure. It's a big challenge that every administration over the last 40 years has tried to struggle with or has struggled with. So that's very important. It's going to take years to solve. So that's the short answer to that's a long answer to your short question, Cathy. There are still challenges ahead for the Philippines. Now, going on to other issues as to how this might affect the Philippines, I don't think any market in the world can price what's happening right now. Like, if you take a look at the Philippines, we might have the positive effect of saying, hey, we're slightly more competitive because we have fewer tariffs. But as you said, many of our exports are labor exports. What if Western markets go into recession? What if oil prices crash? Then does the Middle East hire fewer Philippine workers? Do the U.S. cruise lines hire fewer Philippine workers? And then there's the immigration question at all. So our labor exports might not be safe. BPOs might continue to be a bright, shall we say, star, or continue to be a shining star, because companies might try to cut more of their cost, and they say one way to do that is to send more services to the Philippines. But the challenge is, at some point, if it becomes too big, then it might also become a target for retaliation. So there are many moving parts to this, and that's what we're going to be watching the next few months or even few years.
And what companies do next, because really the next shoe to drop is what they do with CapEx. So I wanted to go back to Carlos here and ask him about the CapEx that you've already started to spend on AI. I know that is in full swing, but right now with how things go, are you going to be more tempered? Are you going to be pushing back? What's the way forward, Carlos?
Not at all. I would say actually quite the opposite, right? If we see that cross-border commerce becomes more challenging, it's a great opportunity to double down on those countries and those areas where we have very strong local presence, right? We've been here for 13 years and we'll definitely be here for at least 13 more. So the reality is that when you have this stronghold, what you see in a way is that it actually levels also the playing field, because all the local sellers and the local investment become even more relevant during this time, right? So we've been investing heavily on AI, and we're very lucky to be part of Alibaba Group, where there are a lot of very exciting developments coming up, not just on the back end or on the operational side, but actually on the user side. If you look at today, our app, it's fully personalized, and you also have a lot of the shopping assistants like Lassie Chat, where we help you finding the right items and making your journey easier. So we will continue to invest. And I would say not just in AI, where we're definitely leading and investing aggressively, but also we continue our logistics expansion, opening more hubs and doubling down on the provincial plans, right? So in a way, it's a bright spot because e-commerce continues to grow. And the reality is that as long as we believe that the demand will be there and that all the technology and the infrastructure that we're developing will be used, it's actually a great moment for us to invest. Well, maybe there's more uncertainty and other people are pulling back, right?
Well, I am convinced it's lucky 13 indeed, and the next lucky 13 for you, Carlos. Thank you so much for joining us. Carlos Barrera of Lazada joining us in Manila, and Bob Herrera Lim of Teneo. Thank you so much. We'll keep an eye on the investment climate in the Philippines. But first, I wanted to check in on Dino. I know you've been so busy with the clients there, but I've seen that the PSCI has fallen 0.4%, peso down. What's going on right now in terms of volumes?
Yeah, I think it went down 1% already. So the market's slowly trying to digest the the Trump tariff. But if you look at the peso, it's not really moving. That's a big surprise for me, to be honest, because the dollar index actually moved lower overnight after the announcement.
Could there be a chance of a pivot, maybe throughout the trading day, where we see that we're going to be hitting the intraday low this morning and then pivoting up?
I think we have to wait for Europe to open. That's the key driver for me. If they come out with a policy, as I mentioned, that they're going to retaliate harshly, then we could see more weakness on the dollar and the peso to recover with that. Yeah.
All right, all eyes and hands on deck. Thank you so much. Dino Aquino of Security Bank joining us from the trading floor. And just to wrap it up, I've got Raul here who listened to everything. I'm sure you've got an interesting story to tell your graduate students when you go back to the classroom.
Sure.
What do you think is the significance of what's going on? We've survived the global financial crisis, maybe the Asian financial crisis. I was already a business reporter then. You were probably in the markets
So was
already.
I working.
So how would you contextualize this?
Yeah, well, it's a surprise because this is not the first term of President Donald Trump. No? He was already president before Biden. No? And yet his aggression with respect to tariff has heightened this time around. No? And for me, the biggest risk that this introduces to the Philippine market, for example, is that the inflationary environment this will create in the United States might result in the expected rate cut in the United States being deferred. And that might be negative for the Philippine market as well.
Okay.
More so because we are, in my view, in dire need of a rate cut on April 10.
Do you think we'll get the 50 basis point then, rather than 25 after what's happened
That's
today?
a tough call. No, but I think the central bank will be careful and prudent and probably start with 25 basis points.
Got it.
After all, there's still opportunity to reduce rates going forward.
All right.
But again, having said that, with the inflationary environment a concern in the United States more so now than before, then that might result in the Philippine Central Bank also slowing down on potential rate cuts. And that
Okay.
might impact negatively on boosting GDP growth to potentially hit that 6%.
I'm sure your students will have more questions. We got to
I'm
wrap
sure
it up.
they will
Thank
have
you
a lot of
so much.
questions.
Raul Ruiz
Thank you.
joining us here and from the Ateneo Graduate School of Business. So the peso is down and a 1% drop in the first 30 minutes of trading, and the markets have fallen. In fact, the U.S. futures trading, we're seeing some green shoots here. I'm seeing green arrows. The Dow is up along with the S&P and the NASDAQ. That portends a higher open on Wall Street when trading begins at about 9 p.m. Manila time. So we'll have a look at that as well as the Philippine markets. And that is it for Money Talks with Cathy Yang. We will be tracking the markets throughout the day and catch us again tomorrow at 9:30 a.m. here for a follow-through. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.